All right.
Good afternoon. My colleagues and I remain squarely focused on achieving our
That's the fucking words
dual
of
mandate
doom.
goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization,
Yeah.
and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee
really? I
decided
wouldn't
to leave
say.
our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments.
Thank you, Stan.
Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment,
Bullish.
private payrolls rose at an average pace of 29,000 per month.
Dude, this guy's actually
A good bit of
taking
slowing
great care of the
pace job
economy, I'll be
growth
real.
over the past
The only
year
reason why it's
reflects
still
a
standing
decline
is
in the growth
fucking
of the
Powell.
labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal.
Yeah.
Estimates based on the Consumer Price Index.
And you definitely will
indicate
not
that
hit
total
that, given the
PCE
fact that your
prices
term
rose
ends later this year, and
2.9%
Trump is going to
over the 12
absolutely
months ending in December, and that excluding the volatile food and
smash the
energy
interest
categories,
rates to zero.
core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is.
But I mean, we kind of knew
set
that
course,
the interest rates
and
were
we
not
will
going
make
to
our
change at this
decisions
meeting.
on
I don't
an
necessarily
basis.
think they will until
To
Powell's
conclude,
term
the
is
Fed has been
ending in,
assigned two
I believe
goals
it's
for
May
monetary
of this
policy:
year.
maximum employment and
May or
stable
March, I
prices.
can't remember.
We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
All right, let's hear it.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition,
Fair enough.
Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I
Okay, well, let's not hear the questions. Let's break this down, right? So Powell said that for the first meeting here of 2026, right, which is this one, they are going to leave the rates unchanged, right? And they are going to aim for the 2% inflation target, right? Right now, they're not really there yet, according to the official inflation score, right? And we'll have a look at it in just a second here. Let's see. Let me fix this chart up. This is annoying. My computer broke down. Well, not broke down, but I had to restart it a moment ago, and so all these charts are now messed up. You're gonna have to bear with me a little bit here. Well, anyway, so again, they are aiming towards their baseline target of 2%, which, I mean, we all kind of knew, I hope. But I don't necessarily think they're gonna get there anytime soon. I'm gonna explain why in this live stream, okay? So again, first meeting, rates are unchanged. They stay right here at 3.75%. And again, that was kind of expected in the first meeting here. Again, Trump and Powell have polar opposite opinions regarding the interest rates, right? Trump wants them around 1%. Powell wants them unchanged, right? He wants the inflation rate of 2%, and the official reading right now is 2.7%. Now, let me show you what Trump is, continuing to refer. He's referring to the true-flation rate all of the time, right? And if we take a look at true-flation, you can see that it is drastically different in comparison to the official reading, right? So right now, look at this. The true-flation is at 1.116%, right? And this is, just miles below their target. You can also see us posting about it here, right? This is just miles below their target of 2%, right? And so the official reading is getting closer and closer to the target of 2%. The true-flation is far below that target. And so that on its own, leaves room for rate cuts, right? But I'm going to explain why it's probable that we're going to see many more rate cuts, okay? But before we get into that, I want to quickly talk about gold and silver, because I know it's a hot spot or a really hot topic right now for a lot of traders, and fairly so. I mean, they're going parabolic, right? You can literally compare this to a meme coin chart, right? And so let's have a look at this, right? So we have silver on the right, we have gold on the left. Now, in my opinion, at least when you look at gold, what we're seeing now is not even comparable to what we what we saw in 2011 and then 1980, and there's good reason for that. You see, a lot of people view this as a negative for Bitcoin, right? Because they think, okay, all the attention is going into metals. People don't trust Bitcoin. They don't want Bitcoin. They want metals like they've always wanted. But let me tell you why this is actually a positive, despite what a lot of people, say and think. Gold is a front runner for Bitcoin, meaning gold moves before Bitcoin. You see, a lot of people on crypto Twitter talk about Bitcoin as if it's, meant to just follow gold 1-to-1. So when gold goes up, well, then Bitcoin follows right after. That's not how it works, okay? Gold and silver has been used as a store of value for hundreds of years. It is the first thing that banks are going to pivot towards. It is the first things that institutions and investors, whales, retail is going to pivot towards, because it's what's familiar. It's what has a proven track record through hundreds of years. right? We can simply not expect a risk asset like Bitcoin to follow these assets one by one. But what we can expect is for this to be a front runner for Bitcoin. And I'm going to explain now. And actually, I'm going to give you an example. So let's have a look at 2024, right? Because that's probably the best example of what we could see moving into 2026. So in 2024, September, we started to see quite aggressive rate cuts, right? And as you guys know, rate cuts are bullish for risk assets such as Bitcoin, but it's also bullish for metals such as silver and gold, right? Even the expectations of rate cuts, right? So they don't even have to take place. The expectations alone can drive the asset. Now, let me explain. Down here, we're looking at gold. Now, have a look at the price action pre-rate cut in 2024 of gold. We were stuck in a boring consolidation, right? There was not much going on when we look at gold. The 2nd of July, that changed entirely because gold started to rally. It started to go quite parabolic here. And of course, this is nothing in comparison to what we're seeing now, but gold was a front runner for Bitcoin in this case, because if we have a look at Bitcoin, right, it only started rallying in September. Gold started rallying in July, and Bitcoin started rallying in September. And so what makes you think that what we're looking at here is not the exact same thing, right? Silver and gold is on a parabolic run, right? And you could have said the same thing here. So if you were looking at the Bitcoin market, early September, right? So say, late August, early September on Bitcoin, you would have said the exact same thing. Gold is going parabolic, right? Right here, gold is moving higher and Bitcoin is going lower. Bitcoin is stagnant. Bitcoin is not doing nothing. Gold is better than Bitcoin. Bitcoin is going to fail, right? That's what people were saying here until they didn't, because Bitcoin followed gold, right? And so we're seeing the exact same thing now. Gold is rallying. Silver is rallying. Rate cuts are heavily anticipated and expected in 2026, just like they were in 2024, right? And so naturally, Bitcoin is not going to follow yet. It's going to stay stagnant. Now, the only logical explanation as to why you believe that this is entirely different and it has nothing to do with rate cuts or Bitcoin, the only logical explanation for that would be that you do not believe in rate cuts in 2026. Now, let me show you this, right? Because I believe that they're quite imminent, to be entirely honest. Again, the interest rates are sitting at 3.75%, which is not particularly super high, right? They're not low either, but they're not ridiculously high. They've been much higher, right? 2024, when we got those aggressive rate cuts, they were sitting at 5.5%, right? Now they're sitting at 3.5%. But let me show you this. First of all, regardless of what Powell says, regarding interest rate, his term is going to end in 2026. Let's see. So it's going to end in May of 2026, right? And you might sit there and say, well, why is that significant for the interest rates? Well, let me tell you this. Most people think that Donald Trump has no influence or direct influence on the Fed's decision making, right? He has no saying when it comes to the Fed. Their opinion is their opinion. He can't do anything about it. And that is true, except right now it actually isn't, right? Because Powell's term ends in May. That means Trump can theoretically appoint a new chairman, and believe me, he is, right? And he is going to appoint someone that has similar, if not the exact same views on interest rates as himself. Trump is a guy that when he wants something, he's going to figure out a way to get it. That's just how he works, right? And so he is most definitely going to appoint a chairman that aligns with his 1% interest rate goal. That's right. Trump wants interest rates at 1%, and he said maybe even lower than that, right? And he said he would do that in less than a year, right? So rates from 3.75% all the way down to 1% in less than a year is crazy, right? And you might sit there and say, oh, well, that could fail. What if he appoints someone that, doesn't align with it? First of all, I don't think that's going to happen, but let's say that he did, right? Have a look at this. Trump calls for a $1.5 trillion military budget in 2027, up from $901 billion in 2026. So this alone, would almost imminently require rate cuts if he follows through with the $1.5 trillion defense budget, right? And so the only way that I see rate cuts not happening in an aggressive manner in 2026 is if they raise the taxes to pay off the debt, right? And I just don't see that happening, and I'm going to explain why. Okay, so let's have a look at this here. First of all, right, Trump has called for the single largest tax return season in 2026. Okay, so that's one thing. The other thing is that Trump has directly said that he wants, or there's a chance he's going to remove income tax, right? And so that doesn't really hold up, in my opinion, right? We are most definitely going to see rate cuts in 2026, which again, yes, is going to be bullish for assets like gold and silver, but inevitably it will rotate into Bitcoin. And the capital doesn't even have to rotate into Bitcoin. That's what people don't understand. Silver and gold and Bitcoin can go up simultaneously. What we need is the investor risk confidence to return, right? And it might be at a higher baseline than previously seen because of a guy like Trump. He's very uncertain, right? He's uncertain in the sense that market conditions can change very fast. And for a risk asset like Bitcoin, that's not super good, right? So there's a higher baseline of risk appetite from an investor point of view, and we have to reach that baseline, right? And the immense rate cuts that we could see in 2026 could be the main catalyst for that investor risk appetite to finally grow up towards that baseline, right? And so, in my opinion, there's pretty much no way. And if we have a look at the Fed balance sheet, right, you guys probably know already, hopefully you do, that quantitative tightening, QT, whatever you want to call it, has ended, right? So what this basically means here on the left is quantitative easing. That's when the Fed is expanding their balance sheet. There's more money in the economy. There's more liquidity, aka bull run conditions. There's looser or loose liquidity conditions. Now, the opposite of that is quantitative tightening. That's when they're actively shrinking their balance sheet, right? And they can do that by either manually selling their bonds, which they don't really do, or they can, let them expire. And then that means we are under tighter liquidity conditions and we have less liquidity in the economy. And that's the so-called bear market conditions. First of all, liquidity expectations immediately drop. And assets like gold, silver, and Bitcoin rely heavily on the expectations of liquidity specifically. And under QT, that's just very difficult, right? If you notice, gold has also been going, much higher since QT ended because the liquidity expectations are naturally going to rise. Okay. And so I believe that if everything follows through, right, the defense budget increases and the rate cuts follow through and all those things, right, the new chairman is appointed and he's in alignment with Trump, well, then I could see the Fed balance sheet making an all-time high above 9 trillion. Right now we're sitting at about 6 trillion, right? And if we have a look, the Fed balance sheet is obviously, continuously making higher highs, if you will, right? Not that you should look at this like you would look at any other chart, but I mean, we tend to make a high, then we have, a shrinking balance sheet, but it doesn't shrink down to what it was previously to the easing, right? Previously to the expansion of the balance sheet. And so that's kind of what we're seeing here. We had quite a tightening, right? We had quite the shrinkage of the balance sheet. And I do think that right around now would be a normal, so to speak, time for the balance sheet to start expanding again. Okay, so I do think that quantitative easing is possible moving into 2026 for a multitude of reasons if we're not already in it. Okay, they might just not call it quantitative easing, and what that would further do in terms of the rate cuts, right, is debunk the dollar or devalue the dollar and make the dollar less valuable, weaker. Right now, the dollar is already, falling tremendously. People are losing faith in fiat day by day. And you have to remember what Bitcoin actually stands for, what Bitcoin is for. It is for these people that understand the fiat system is not trustable, right? It's broken. And so once enough people wake up and realize this, well, then suddenly a lot more people are going to rotate towards an asset like Bitcoin. Right, a decentralized asset like Bitcoin. And so the dollar going lower and lower and lower is massive for crypto. It's directly inversely correlated to Bitcoin, which means when the dollar goes down, well, then Bitcoin goes up, right? And these rate cuts are going to bring it down even further. I have said since the retest of this multi-year resistance level that my 2026 DXY target is going to be these lows. Now, looking at the chart now and what's to come, we could go even lower than this, right? First of all, we have the rate cuts coming. Second of all, the U.S. government is now talking about buying yen to help Japan, and that would, further weaken the dollar. And so all of this data that we're looking at just points toward, higher prices. It really, really does. I have a lot of trouble here being bearish. I really do. Again, I'm a macro driven guy. I'm not a Bitcoin maxi, right? I really couldn't care less if Bitcoin goes up, down, or sideways. I care about making money. So I'm not going to sit here and tell people that, I'm bullish because I believe in the network of Bitcoin. I might do that, right? But I'm also a realist. I'm also a guy, I'm also optimistic, right? I've been in this industry for very long. And so if I thought that we were going lower, that's what I would say. Now, of course, when you look at a market from a macroeconomic point of view, as we're doing as we speak, well, then that's going to take a while to play out. It's not like technical analysis where you say, okay, I'm going to expect price to reverse right here. That's not how macroeconomics work, right? It takes a while. I always say that you should use macroeconomics or fundamental analysis, whatever you want to call it, to determine direction, and then use technical analysis to time your entry. Okay, that's sort of a good way to go about this whole trading space. And so what we need, as I mentioned earlier, is for the investor is confident or risk appetite, whatever you want to call it, to rotate towards that baseline, right? Now, if we have a look at the VIX, which is what I like to call the fear gauge, right? An asset that we can use to calculate the investor risk confidence. We are actually at great levels. Let me explain this. The VIX, right? Whenever we're trading above 30, I consider that risk off season or bear market conditions for risk assets. When we're trading below 20, I consider that risk on season, right? That's when we can expect bullish price action. Right now, we're at 16.35. That's not a bad place to be right before all of this stuff is likely going to happen in 2026. And we can further back up this statement by looking at the Russell 2000. The Russell 2000, right, since January 1st is the index for the small cap stocks in the US, okay? And that basically means this is only going to rally or go higher when the investor risk confidence is high enough for them to want to invest or have the appetite to invest in small cap stocks. And so small cap stocks sit below Bitcoin and crypto on the risk curve, which means when this goes up, well, then what's next in line is likely going to be crypto. So all in all, it looks like the risk appetite is continuously growing between investors. Okay. And of course, we have things like the copper to gold ratio. I mean, have a look at this, right? We bottomed in on the copper to gold ratio in April of 2017. That was followed by an 1100% rally. Saw the same thing in 2020. We bottomed in here in April on the copper to gold ratio, and the bull run really took off in September, giving a staggering 1500% rally. Right now, the copper to gold ratio is lower than both of those previous bull runs. I mean, guys, I really don't understand how people can sit there and confidently be bearish. I just don't, right? In my opinion, the majority of guys that remain bearish for no apparent reason is because they have previously hurt themselves or they have an ego that needs to get fed. That's what you have to understand about crypto. You have to be very picky with who you decide to listen to in the industry, because a lot of guys are going to base their opinion entirely off of their emotional state of mind. Okay. But I mean, even just zooming out here on Bitcoin, right? Looking at a weekly time frame, you cannot confidently sit there and tell me that this looks like a bear market. I mean, come on, right? I mean, we're printing higher lows here after higher lows that's followed by higher highs, and we're respecting support levels on a weekly time frame. Right? I mean, it doesn't look that bearish, and the underlying macro environment is looking better and better and better, right? So a lot of this bearishness comes purely based on previous price action and random patterns. Here's what you have to understand, right? God knows how many times I've seen this pattern pop up on my Twitter. We have a bear flag here, and because we have a bear flag, right, well, then price is going to absolutely dump towards the lows of 2022. I mean, it's ridiculous, right? You guys have to understand this. A bear flag is not going to drive a $1 trillion asset lower. It's just not, right? There's no institutions that are shorting a bear flag, right? There's no major institutions or whales that are going to sell their positions based on a bear flag. It's just not going to happen. The only time patterns and technical analysis work is if the underlying macro environment supports that narrative. So for example, in 2022, or yeah, 2021, 2022, we had a double top, right? And so everyone looks at this now and calls it the same double top as in 2022. Let me tell you this, it is nonsense, gentlemen. The only reason why this double top in 2021, 2022 actually played out is because we had so many crypto companies that went bankrupt, right? And so the underlying macro environment supported the double top. It's not like the underlying macro environment was just, bound to go much higher and everything was looking solid, but then suddenly we got a double top and everything went to zero, right? It's not how it works. And so all of this technical analysis means nothing without the underlying macro environment. And right now, it's just not pointing towards a crash, right? You simply cannot compare what we're seeing right now, despite of a double top, to what we saw in 2021, 2022. You can't, right? And in terms of my, of course, I'm talking about, the broader time frame. I'm of course, when I'm looking at the macro environment, like I am now, I'm trying to predict the next long time, like 2, 3, 4 years worth of price action, right? I'm not saying that we can't go lower within the next week or two. I don't care about any of that. I'm trying to get an overall understanding of the long-term direction here by looking at the macro environment, right? And so that doesn't mean that, we can't drop further, right? We can absolutely go to 73K. I mean, I have buy limits all the way down to 65,000, right? And so it's not entirely impossible that we can continue lower for a while. But if you're looking to invest in Bitcoin and looking to hold for years on end, why would you care about any of that, right? And so that's my argument for all these guys that keep saying, oh, we're going lower. Okay, and so if we do, then what? Right? I'm just gonna keep DCAing my way in. Chances are I'm gonna end up making more money than you because you were looking for the perfect opportunity, whereas me, I was just buying because I knew where we were headed, within the next 5-10 years. And so that's the argument that you can give to all these guys that continue to push a bearish narrative into your head, right? But again, looking at an intraday time frame, of course, we don't pay attention to macroeconomics in the slightest. I mean, these small intraday price swings here has nothing to do with the macro environment. And so all of the intraday traders here, of course, you don't have to analyze all this boring data, right? Because it doesn't really apply to you, and me too, right? Of course, I have very long-term large orders on the line, but a lot of my income is based on intraday price action, right? So again, my target here for today, I was really hoping to see these equal lows here swept with FOMC. We didn't really get that, so perhaps we could see a rotation lower towards the equal lows that we're looking at down here at about 88.833. And it looks rather bearish in my opinion. Let's have a look at it. So again, here's an easy way, which by the way, if you haven't seen it already, we have an entire community that's free, and you get a whole video course with all the systems that I've used throughout my career. And this right here is one of the systems on how to, identify market structure. So one of the things that I really enjoy doing when it comes to, figuring out what direction the market is headed in is to pay attention to highs versus lows. So for example, this leg here that we're looking at, right? It started because we swept the high. Now, what's important here is that when we ran this high up here, we got no follow through beyond this point, okay? Again, I'm looking at a 5-minute time frame here. We got no follow through beyond this point. We immediately sold off. Now, when this happens, right, what I'm interested in is to see how the market reacts to hitting a low. Do we get more follow through at the low compared to the highs? And in this case, well, we most certainly did, right? We swept the low and then we continued lower for quite a while. In other words, we got follow through. Whereas up here, we didn't. And so this to me says that bulls have trouble pushing price above highs, but bears do not have any trouble pushing price below lows, aka bears are in control, right? And so what we could be looking, I see two potential areas here. We have the first one, which is probably the highest probability one, if you ask me, is the sweep of the high that you're looking at here, right into optimal trade entry of the range at 61.8. So that's a potential short right here. Again, the sweep of this high ending right there at the 61.8, that could be a potential rotation down towards the equal lows that we're looking at here. Or it could be the optimal trade entry from this high that we have actually just hit. So again, these are the two potential reversal zones that I see going towards my target. down here. Either it's here, which again, I was too late. I didn't enter here, or it's up here. I'm more prone to believe that it's gonna go up to the optimal trade entry of the entire range, but we can wait a little bit and see if that is going to happen. Oh shoot, let me enable the music, gentlemen. Let me enable the music. There we go. Let's see. 75K then all-time highs. Yeah, I mean, very possible, brother. Very, very possible. Again, all this stuff that I'm talking about here, right? Again, it's longer term. So as you said, right, we can absolutely dip towards 75K and then rotate higher. That's totally possible. Because again, what I'm talking about in terms of the rate cuts are likely going to happen later throughout 2026, right? It's not like we're in January, right? It's not just going to happen at once and then we're going to explode higher. So absolutely. Again, I have, we can even look at my orders right now to be exact. Have a look at the daily time frame here. So I have my one order here. Then I scroll over here. Yeah. So I have one more order at 75.9. Then I have the last one at 67.6. These are futures orders, right? Then I have all the spot orders as well. So again, yeah, totally doable that we drop lower, right? It's pretty arrogant to think that you can actually time price that right. So a lot of people will sit here and say that, you know, we're just going to skyrocket higher from here. Is it possible? Absolutely. That's why I'm long as we speak. But it's also possible that we drop to 75K, then we explode. That's why I have a limit order. But it's also possible that we go to 67K and then go higher, right? So it's all possible, and it's all just, you know, educated guesses that we're making. Well, let's have a look here. I mean, this doesn't look too bad now. I wouldn't actually mind taking a short here. We're gonna have to see something like this. Weekly holding really, really well. Let's have a look at the weekly. What do you mean weekly? Like, you mean the structure as a whole, or? Because in my opinion, it is holding really well. I mean, the structure as a whole, right? Higher lows, higher highs. And just a support level that we're respecting. And that's also why it's a little bit confusing to me how people can just continue to call this a bearish market, right? Because realistically speaking, it hasn't really shown that from a technical analysis point of view or a macro point of view, if you ask me. And if you are paying attention to technical analysis like this, right, you can actually also see the fair value gap that we're looking at here, which is the 3 candlestick pattern. We're still holding it, right? And so we've not had a candle closure below this weekly imbalance yet, which again, the fair value gap held this Sunday. Amazing. Yeah, exactly. That's literally what I was just talking about. Exactly. I mean, in my opinion, right, what really qualifies whether something is bearish or bullish is whether we respect or violate certain imbalances, right? So right now it's difficult on an intraday, you know, from an intraday point of view, because we're bouncing in between two gaps. So in an ideal world, you wait for either a close above the top one, so the bearish one, or a close below the bullish one, and then you either short or long based on that close, right? We closed in, not below. Yeah, exactly. That's what I'm talking about. We're still holding this bullish gap, right? So right now we're bouncing in between these two because they're technically still both holding, right? And so that's why it can be pretty difficult on an intraday basis to start trading, because we're just bouncing in between these two weekly gaps. Right? Not to speak of the optimal trade entry that we're also, you know, bouncing quite nicely off of here on the weekly. So if I draw it from the high down to the low, right, we're just stuck in the middle of this optimal trade entry. And so really right now, there's nothing that's told me that we're just gonna flush, right? But again, totally possible. What I'm really waiting for is just for a close above the weekly imbalance up here, because then it's pretty much good to go. I think also, right, that's the only problem, is that we've closed below the monthly bullish fair value gap that we're looking at here, and then we're kind of still holding this bearish monthly gap, right? So then you could argue that that's a problem, but then you could counter argue that we're also still holding this bullish gap here. Right, so all in all, it's a pretty sticky situation. Only issue for me is that trendline liquidity below. Yeah, but I mean, when you talk about such a high time frame, I think the macro, I think that the underlying macro environment is just going to overrule liquidity. I don't think they're going to send it all the way down here. I would find that very difficult to believe. Even looking at NQ, ES, and all these other assets, like on a weekly time frame, you know, it's pretty difficult to manipulate price all the way down here, I would say. But again, who knows, right? It could totally happen. But again, you could also argue that on a daily time frame, we have quite a lot of trendline liquidity, right? Yeah, I don't know if we're actually gonna up running this. I don't think so. I hate trading PM session. I'll be so real. I really do not like trading PM. So what I'll do is I'll monitor this, and then I think we'll just call it a day here. FOMC meeting went quite, as expected. Not much changed, and we can also see that on looking at price action, right? Nothing freaking happened. Yeah, thank you a lot for showing up. I hope the insights gave you or you learned something you didn't know before. Again, I'm just gonna paper trade this or just tape read it with my eyes, see how it plays out, because again, right after FOMC, it's late. I don't usually trade PM. I'm not super interested in shorting this today. I'd rather spare the capital for tomorrow for a better day. Actually, let's quickly check the economic calendar for tomorrow, if there's anything interesting here. We got unemployment claims tomorrow, so there's at least something that could bring volatility. So yeah, that was it. That was it for tonight. I hope you guys enjoyed. I only trade UK. That's crazy. No, I never trade London session, anything like that. I have for the last 5 years, I think. I've never traded anything other than the New York Open. So from 9:30 EST to 11:30 EST, that is my go time, right? That's my 2 hours of pure execution, and it has been for the past 5 years. Now, before that, I did actually trade pretty much every session, right? So that was London session, and then AM and PM New York. Those were long days, man. But yeah, now it's just those 2 hours. But again, if UK works for you and it aligns with your time zone, then that's just perfect. So yeah, thank you so much for watching, ladies and gentlemen. I will see you in the